Welcome to TradeTheMBI.com. This is John. This report is for the 26th, and per what we saw from the MBI readings and the breakdown in the MBI magenta and the yellow, particularly below the 33, we got the follow through that came back. Right now, we're looking at a little bit of a gap back up after some of the tech earnings were positive, but you can clearly see the crossover of the white MBI. Very negative in that situation, and this all stems from what we saw back here of the DOC spread, where cyan shorts overtook green, and then it just continued to fade, and we started to see the softening of the shakeout gold. And once that took place, we knew that we were getting ready for our nice little dip. Of course, it does set up turnaround possibilities, and you can see the beginnings of some magenta turnaround, but as long as white's leading, there's going to continue to be softness in that back and forth. So in line with expectations, we knew that that support would break given what we were seeing from the readings in the NASDAQ. Likewise, it already started with the crossover. So the NASDAQ started off weaker and it just progressed completely through there, but much bigger gap up for the NASDAQ following those earnings. And we'll see if that's able to turn around the negative shakeout in that, because that's really what started this. As we got down to the zero, we were seeing that just wasn't going to be sustainable, and it was just a question of when it would fall through, and it was just a matter of waiting for enough short interest to really start taking hold to really push that through the edge. From a treasury, of course, people flock into safety when they see that kind of selling. Probably would expect to see some kind of a reversal on that when they're ready to move back into the market. But until we see that dip, it's more likely that just people are going into safety at this particular stage. Oil still hovering around the same area. It's been in a weak stint for quite some time. Would have expected to move towards the 50% level, given the negative on that reading. So the fact that it's holding up as much as it is, it's problematic, because it just means you're just going to push right back up towards the highs. But we were expecting that gap fill anyway, and it's pretty much done just like we thought it would. And from a gold standpoint, pushing, and that push is also going to mean continued weakness for the dollar, and particularly as you're getting into that debt ceiling debate, and that, you know, the trauma of all that always causes everyone to be a little skittish. And you know, it's not like nobody's talking about not raising the debt ceiling. They're just fighting over how it's going to get done. I mean, the reality is, as long as you've already got $1 trillion deficit, now you're looking to just add more to it. So you're going to be at what, a couple trillion for the year. It's crazy stuff. So that's why you see euro rise, gold and them are also going to take all of that into account. You can see the euro approaching 110.5, should move past that one, and that will get it to the upside of the range, which is right around that 111 that we've talked about for some time. And you can see all the way from the end of last year, when this started to turn around, as there was a recognition that there might be some softening in the U.S., both in the economy as well as just from the Fed, the idea that they would have to soften. Now, the Fed hasn't done any of that, so this idea that the ECB somehow is going to be able to be more stringent in their rates is pipe dream, because I think they're all going to suffer equally. But this just gets things back more into a normalization. And I think they wanted to prop the euro back up there into that range. Gets dangerous for them when it gets down to that mid-level, because again, who would want to be in the euro bonds and things like that, which they desperately need buyers for in order to remain, they're not solvent, but just in order to remain functional from a perception standpoint. And again, it's all perception, but that's causing the nice bounce back from Bitcoin, and everyone who was, you know, seeing the demise of all of them when this was just a normal correction, filling in positive extremes. So didn't create any excitement on my part. It was just kind of a standard setup. It still hasn't gone into a full buy yet, but I got magenta cross over here on ETH and that, and the short-term buyer jump once it got above that negative 13.5 down here with the steel. That was really what we were looking for. Now you're getting the green move. So next step will be to look for it to cross red. Now, if it fails to do so, that would then lead to a more significant decrease, but you notice you're not seeing that white spiking up any higher, and that's where I would suggest that you would get down towards your 50% and maybe even have trouble doing it there. And of course, TS back and forth. I had it up for a little bit, and then it just went down a few minutes ago. Very frustrating from that standpoint, but market is doing pretty much what's expected, and we're not really having any issues with how those ratings are going. And I think it's pretty straightforward at this particular stage. And going into end month, there better be some really strong performances. Otherwise, I think that um, that push up here of white MBI, if it continues, we're going to see a move back down to that 40-30 and get us right back into the same ranges as before. And of course, the fact that this is a lower high than the previous one, you're going to get that talk, and that would about double tops kind of situation, and that would definitely put back into play the break even, which is the white line. So something to bear in mind. As always, though, continue to look for me on Skype chat. Trade well. We'll talk to you later.